got the pleasure of being joined by Rob Evans, who's joining us from Oz, who, among other things, ended up starting and growing Velrada, and he's going to tell us all about that and lessons learned. You grew it successfully and then sold it, I believe, Rob. So welcome to the podcast.
Thank you, Joe. Good to be here.
Could you give us a little bit of your background and how you, up until the point, I know you were with Arthur Andersen, and then you ended up, I think, as a managing director before you started Velrada. Could you tell us about the journey that took you to starting up the firm, please?
It's relatively straightforward. So I joined a firm that was acquired by Arthur Andersen in the mid to late 90s. I left there in 2001. My wife's from Perth. We'd always been thinking about coming here, and the opportunity sort of presented itself. I'd been working in the tech media part of Arthur Andersen's business, which in the dot-com bust wasn't the best place to be. So it felt like a good time to make the move to Perth. We'd had our first child, a son, and we came here. We didn't necessarily intend on staying here. My wife had worked for Ernst & Young, and we both had that sort of background, and the local Perth market's a bit limited for that skill set. So we both did or started MBAs at UWA, which we got through. And I ran into a chap who had a couple of businesses, actually. He had a subscription-based, if you remember the subscription-based DVD by Post business.
Yes.
If you remember way back in the dim and distant of Love Film in the UK, he had a business called Quick Flicks. And I was introduced to him by someone I'd met at a venture capital event who told me that if I wanted to stay and work in Perth, I needed to get hooked up with someone who had the local relationships and network and capability. And this chap, Steve Langsford, he had a very successful track record in building consulting and solutions businesses, several of which he'd sold. Now, the attraction for me, apart from the helping with QuickFlix, I had that telco media background, was that Steve is very much an entrepreneur. When I worked in the UK in the late 90s, I was in my early 30s, and I saw a lot of Arthur Andersen's customers, people do very well out of floats, IPOs, and so forth. And if you're a paid salaried employee partner in those firms, you're kind of looking at that and going, well, that seems like a better way of achieving success. So I'd spoken to a couple of incubators and funds in the UK, and I met one in Soho Square. They were in a loft, a couple of young Harvard MBAs. And bear in mind, I was in my early 30s. They said, hey, we're looking for grey hair, someone who understands technology and can advise us on some acquisitions or investments and help some of our companies. It didn't go anywhere, but it sort of planted a seed. So in terms of further career or further opportunities, I didn't want necessarily to go back into a big firm, albeit that they have a lot of advantages. So Steve helped me along my way. He had a business called Change Corporation, which was a classic IT consulting, sort of project management, strategy, planning, governance, mainly projects and program management. The big market here in Perth is into the major mining companies and resource companies. And we built that company up, and Jen, my wife, and I earned our way in to be about a 40% shareholder in that business. And that was acquired in 2008. It's acquired by a listed company. And then we moved on and started Velrada with a number of folks we'd worked with who didn't want to stay with the acquirer. Started Velrada in 2009. Initially a focus on product, some product around information management, particularly the SharePoint Microsoft product set. We built that up, developed other capabilities. There's a very strong focus here on operational technology in the mining space. So that's, if you think about remote and integrated operations, systems that manage plant, integrate those with operational ERP type systems, a lot of that kind of work. And then Velrada was joined by two fellows who became partners in shareholders in the business, Dominic Nolan and Saul Sabbath. Dominic brought a tremendous capability, or built a tremendous capability in the Microsoft Dynamics world with assistance from Saul. And Dom led Velrada's work with a big French company called Sodexo.
Yeah.
Sodexo had taken on a large facilities management contract with Rio Tinto, and Velrada was a joint bidder subcontractor to Sodexo for a 10-year, I can't remember the figure, but I think it was a 3 billion outsourcing deal. And Velrada was the main provider of technology platforms to Sodexo and Rio for the facilities management piece, which was quite big. And then that sort of catapulted the firm into that infrastructure, utilities, field service world. And really, we then doubled down on the Microsoft space and became global partners, recognized partners. Were Partner of the Year, I think it was 2019. And then we built out a capability across Australia and then the UK and Europe, and then in the US as experts in infrastructure, field service, utilities, facilities management, both on the rostering, scheduling side and the asset side. Often they're the same. Well, it's the same thing when it comes to maintenance and management of assets and organization of skills and people and scheduling and managing plant. And the business had grown significantly. We were looking, I'm trying to think back now, 2-3 years ago, we were looking at an IPO as an option for further growth.
How big were you, Rob, by the time you sold?
Right. So, to think about this, about 250 people.
Okay.
Revenues were heading towards 60 million Oz, 65 million Oz, and on a reasonably solid growth track. We developed the business. A lot of the growth was coming in the US and UK.
Yeah.
We picked up a contract through Microsoft with the UK Home Office to help with software systems for the G7, the one that was down in Cornwall.
Oh yeah,
so,
I was there.
Were you?
Yeah.
Well,
yeah.
I remember as a kid going down there.
As a spectator more than anything else.
Well, it's not the obvious place to run a G7 event, but
tricky.
Yeah, so so revenues are tracking well. The product, the business, the profitability and the growth was mainly the alignment with Microsoft and the support Microsoft gives to specialized partners around selling IP, incentives and investment. But mainly it was the reach through the Microsoft network for sales and business development that mattered to us. Sorry, go on.
So in terms of the journey, I'm thinking about inflection points where the organization changed, not fundamentally, but you realized that what perhaps got you to point A wouldn't get you to point B. Some firms say there's a point around 20 to 30 people, and there's another point around 100 people where you become a different type of company. Did you have your own inflection points, or was it fairly solid growth?
No, you're quite right. And those numbers are about right. And they're quite difficult times to navigate through. When you're 30 or 40 people, you know everyone by name. The back office is pretty lean and focused. There's quite good alignment. Everyone's sort of hands-on with the customers. When you start to grow beyond that, you have to look at some structure. And we were helped enormously. We hired a very competent CFO. It's a chap by the name of Craig Amos. He's now a partner with RSM. And Craig had worked in larger services, not necessarily consulting, but technology and services companies. And particularly growing our business in the eastern states and Europe and the US, Craig worked with us founders to create a management structure, to create the right levels of delegation, reporting, accountability, but culturally as well. Craig was one of those people that could bring people along with him, very strong personal credibility and intellect and capability. And he helped us also with the preparation for the IPO. So all those things, definitely it's 100 plus, but it's worse where you've got different geographies or more difficult.
Yeah.
So we had a substantial office in Melbourne and one in Sydney, and then smaller offices in Brisbane, Adelaide, and the UK. So that does start to require a lot of managing.
What was your first international office, Rob?
Paris, actually.
Okay.
It wasn't very big, but
did you follow a client out there, or what was the logic behind?
Yeah, Sodexo. So they the solution that we developed for the Australian mining business and implemented it through their European and US operations, mainly in big customers where there was a sort of soup to nuts range of services that they were offering, because the platform that we developed on the Microsoft Dynamics field service solution was sort of covering all sorts of aspects of asset management, people rostering, scheduling, transport,
And
cleaning, security, all that kind of stuff.
how did you manage the expansion of that? So did you send your guys out there to find something to hire? Did you hire local people? Did you did how what happened in terms? And I guess this applies to all your other international offices. Did you have a structure by which you opened and grew the offices?
Well, it's a bit of both, really. I think we had some good people. Two individuals or three individuals in particular. There's a chap called Tom Fuller, another chap in Sydney, Ian Kirby, very good guy in Perth, Sean Byrne. And I think between them, Craig helped us really shape that structure and get those guys up and running. And then once all that was sorted out and we had the right reporting and accountability, we certainly moved people. In the early days, Dominic did a heap of travel. Some other folks did. That's not really sustainable, though. Hiring locally, very difficult.
Yeah.
And yeah, extremely difficult. So combination of Tom had been with us for a while. Ian was a straight hire, but that worked out really well. They both brought in good people. When you finally get it right, it's worth, well, they're good markets in Australia, so it was worth it for us. And we always had the ambition to be a national business. So yeah, but it takes time. It's a lot of effort and challenge. Jen, my other half, managed all of the people aspects of the business, so she did a lot of that work on structure and roles, developing an organizational structure that could evolve. And when you're small, sorry,
when did you start? Did Jen start to bring that in? Was that right from the beginning, or did you get to 30 and think, "Oh hell, we need some type of structure"? Obviously, there's levels to it, isn't there? There's there's the initial competence framework, perhaps, and then you've got the detailed roles, responsibilities, reporting. Then you've got the training side of it. So how did that evolve?
Good question. I'd like to say it was all planned and thought through, but it generally wasn't.
Never is.
I think we had, yeah, exactly. So I think you've got to have a plan, but then you've got to manage the exceptions and adapt around the people. So I guess I took a lot of advice from Paul at Equitech.
Paul Collins,
he's retired now, but yeah, Paul Collins. So Paul came to see us, 2010, 11, he came to Perth.
Okay.
And I took a lot of advice from him. And he talked also about making sure that those key people, senior people, were motivated and aligned with the shareholders. His exact words were, "You get that right and light the blue touch paper and stand back and see what happens." And he was quite right. So we did a lot to align those folks. And particularly when we sold the business, we dealt those folks into the earnout. There were quite a few of them, and quite a substantial portion of the earnout. So they knew what we were doing. They knew about the plans to go public and then the trade sale. But we made sure that they were engaged. So it's half.
How did you do that, Rob? So to talk, I mean, it's easy to say, we got them aligned, but practically what happened in order to get them?
So if we'd gone, so as we were preparing to go the listed route, we'd put in place the structures to be able to do that, compliant with the local listing rules and corporate compliance rules and so forth. So we had externals come in and do the analysis to come up with the benefit structure, the options plans, all of that good stuff. And it's vital in a tech world to have that in consultancy, I think. And then when the offer came in and we sort of decided at that stage to do that rather than the IPO, because the offer was good, we sort of switched and simply said, well, we'll share, as we go, elements of the earnout based on what we achieve. And that worked well, I think.
Okay.
I think if I'd had my time over, I probably would have structured it a bit more effectively for the individuals just from a tax perspective. But At the end of the day,
Did the job.
never always perfect. Yeah,
Did you
it works.
did you hit the targets?
Yeah, we exceeded them. So the business was tracking at about a 20% plus, in fact more, to 25% EBITDA margin. We were on a sort of 10 times, 2 times deal. So 10 times EBITDA, 2 times revenue. So if you think about it, the IPO forecasts were 50 plus. We exceeded those to 60, getting to 70.
Right.
There's a bit of timing in it in terms of the way the earnout works, because there's obviously an element for money up front, and then what you earn is less. But in overall terms, we're very happy with the deal. And it's not just about the financials. The acquirer saw the value in the business, kept it separate, kept the brand, kept the structure, kept the people. And in fact, the management team still has an element of earnout now, retention, that they're working through. And that was, learnings from Paul. And you come back to that point about how you get that growth. You've got to have that team, 10 or 15 people, and they've got to be aligned.
Yes.
They've got to be the right people. And then they need the right leadership and management. And the CFO that we brought in was hugely influential on that and made all the difference in getting all that sorted out. A lot of personalities involved, a lot of expectations to manage.
Sure. Paul's great value, isn't he? He's I think along with, there's a guy in the States called Greg Alexander who's a similar character. But I think they're both some of the best people you can listen to when it comes to growth. Unfortunately, he's retired now.
He has. He keeps
Doing his
promising to come back
fishing, I
and go
believe.
fishing. Yeah. Yeah, I'm also a fan of David Maister. I've never met him personally, but I've read his books, and there's a lot of value in that. And you're quite right about those inflection points, and they can be triggered by a number of things. And it's a tough one. It's worse here because of the geography. But even so, there are different models that work. I think I've seen different models in the UK and Europe. But it's a thing, and you have to deal with it. And if you're going to get scale, it's just an inevitability that you have to deal with it. And most of the organizations, I think, that have got founders and entrepreneurs, consultants are possibly the worst when it comes to solving their own problems and seeing
yes.
seeing what they need to be doing. So there's an element of a need to detach from the consultant's mindset, really, and not overanalyze and overcomplicate, but structure is important.
Did you struggle at all? I mean, some founders struggle with the, becoming the CEO. In terms of course, formally they're the CEO, but they want to get their hands dirty. Sometimes they don't want to let go. Sometimes they don't want to pass over to people who might not do quite as good a job as they do. Did you struggle with that at all?
No, because I'm good at some things, but I thoroughly recognize I'm not good at everything by any means. So I take a leaf out of Richard Branson's book, or Richard Branson's philosophy. You never want to be the smartest person in the room, I'm not sure it was him that said that, but I am a big believer in surrounding myself with people that are more capable than I am. I mean, in terms of the financial structuring, operational management of the business, those sorts of things, I'm quite good at that. But people management is not my thing. Sales is not necessarily my thing. So, we had people in the business who were very good at those things. And I didn't get in their way. I'm not one of those hands-on micro. Well, be careful what I say. If people might disagree, but I'm not. I'm interested in the detail, but I'm not interested in sort of jumping in and just fixing an immediate issue, because it's cause and effect. You've got to go back and understand why those things are happening, and have the conversations about them. If you just jump in and direct, it doesn't solve the problem for tomorrow. And often, I take the view that I'm probably the most ill-informed and not ill-educated, but the person who knows the least about the situation. So best to ask questions and understand. Now, we did have some strong commercial people come into the business, who helped with difficult commercial situations. Next Deloitte partner who joined us, a fellow called Angelo Corellis, who did a brilliant job of building that commercial discipline up. You know, so as you get bigger, you've got to have people with the right skill sets doing the right things.
Yeah.
And strong CFO, strong leaders, operational leaders in the business, strong sales team, and a lot of plates to keep spinning, you know. But
Yeah. It strikes me very often that's part of the toughest journey, and obviously a lot of people sell before they get to the size you're at, but getting from, I'm talking pounds and dollars here, but getting from 10 million to 20 million, I think requires that level of professionalism and leadership at the level below the CEO that isn't naturally there if you've perhaps promoted people up from the ranks who are very good at delivery, you know, and getting that, you know, great management team in is sometimes a bit of a
yes,
struggle.
it is. That's a challenge. You've got to be careful because obviously you're nurturing, developing talent in the business, and you don't want those people to feel like
Yeah.
you're just going to hire in over their heads. And lateral hires, you know, that's very challenging. You can hire people who've got a lot of bad habits, and I mean, I struggle particularly with people coming out of big firms where they
Yes.
had an awful lot of support and places to hide. In a smaller firm, that's not how it works. So it's critical, really. We did make a few good lateral hires. That's probably not quite the right word, but you know what I mean. The right ones were the ones that succeeded, were the ones that sort of fitted in and didn't try and tell everybody how great they were and how they did it before. They sort of got hands on and got in the trenches and helped, and that made a difference. You bring in expertise and capacity and capability, sure, but it's an attitude, cultural alignment thing, especially in a smaller business. It's just yes, you have to be very careful.
Yes. Yeah, it's a hard balance, isn't it? Because on the one hand, I've seen situations where a couple of external hires are brought in and they actually raise everyone else's game who perhaps has been brought up from the bottom of the organization, simply because those people aren't aware of, you know, more professional management practices and, you know, the importance of systems and processes and all the rest of it. But on the other hand, I've also seen people being brought in who are really quite poisonous and
Yes, yes, definitely.
ruin the culture. And it's that cultural fit, isn't it, that you mentioned?
And it's quite hard. It's quite hard to spot them. I mean, it becomes evident fairly quickly. And of course, you know, other senior people in the business have brought these folks in, so we want them to succeed. And there's always an element of some of the existing folks in the business feeling a bit put out. So you've got to try and filter out what's real and what's noise, from both sides. But we got fairly good at it. When we hired people, you know, we were looking for hands-on. As I said, people who want to get stuck in. If someone said, "I need 6 months to learn your business and then, you know, understand your propositions, and then I'll go and talk to some people," that was just hopeless.
Yeah.
You know,
Rob, how did you do that with salespeople? Because very often you've got this, you know, especially with external salespeople, you've set them up targets and they say, well, you know, I need 6 months to get, you know, to get the marketing strategy, do the gap analysis. And then you've got the bonus. We haven't paid people their bonuses yet, so let's wait for that. They talk about this pipeline, and it seems, you know, you said quite early on that you personally didn't enjoy the sales thing so much, so you managed to get external people who were good, but that's really difficult to do.
I'm good at, you know, a lot of the management team are good at consult sell, you know, and that I learned from the Big Four days. And I saw Arthur Anderson bring in some pure salespeople, and we were all a bit bemused by this. and it's a very tricky role because they couldn't deliver, so they couldn't engage with the customer and build that understanding, but they wanted to be front and center. It doesn't really work. It did in a few exceptional cases where you had people who could sort of straddle the two, but they're quite difficult people to hire and find. And we've got, Velrada has 2 or 3 of those sorts of people, but they're very rare. So they're not hands-on, but they know enough, and they've got those sales skills. The thing about consultants generally is that they're not always great salespeople in
Yes.
terms of the old IBM sales playbook, if you like, so finding people who can apply some of those old-fashioned sales skills alongside good practitioners and get on with them and not just treat them as cans of beans, that's quite difficult, very difficult. And the business has 2 or 3 of those sorts of folks, and they're just very hard to find. But if you do find them, hang on to them.
Yeah. Yes. Yeah. Yeah. They're like hen's teeth, as they say.
Well, it's sort of you give a consultant a problem, and of course they'll see all the opportunities and upside, and they'll tell the customer about all that. And look, this is elementary stuff, but they'll tell the customer about how great they are and what they can do. The salesperson will be sitting there asking the obvious questions or working out: do you have the authority to do this? Have you got the budget?
Yes.
Is this an immediate issue? Is it a priority? Who else are you talking to? Are we just one of 50? Are we making up the numbers? Blah blah blah. And then the personality to be able to engage with the customer and develop the kind of relationship that the consultant doesn't necessarily have. I learned this lesson early on in my career. Anderson had a big customer, it was a big German drug company, and it was a Siebel implementation, and we'd partnered with Siebel. Siebel sales guy was very good, and we were just about to close, and we were heading off to a meeting, and he said, "Mate, don't come." And I was flabbergasted. I was like, flummoxed. And he said, "Look," and I'm simplifying things here. He said, "Look, I know what you're going to do. You're going to want to talk about implementation, and you're going to ask these questions, and and that's all good. But just do that after we've closed the software deal, because then the customer's committed. And if you start asking all those questions, you'll put them off. Those questions may be all valid, but right now that's not what we should be doing." And I was a bit put out, and then I sort of thought about it, and I realised it's a different skill set. If you have a consult-sell style relationship with a customer, it's a different thing to, the IBM enterprise sales play view of the world. And if you go into the majors, the Accentures and so forth, PwCs, that's how they operate at the sales level. They're fairly organized, systematic in how they approach things. Certainly Accenture these days. But they're just very rare people to find and hang on to. And we did develop a few internally. That worked quite well.
If you're going to do that, you've got to have someone who can sell, but also understands what is and isn't possible, and can be honest about that. Because again, what I see sometimes is sales team who are great at selling, they track stuff over to the delivery side, and the delivery people are either stuck with a statement of work that can't be delivered, or they've mistimed the amounts of the scopes wrong or whatever.
Yeah, and there was always an internal debate about that and a bit of tension. And the good salespeople would hustle people along, would sort of manage expectations and get people comfortable internally about a process. The worst ones were the ones that just lobbed a tender over the wall and said, "Get that done for me."
Yes.
The best ones were the ones that were in the office preparing tender material, but had already done the pre-work and qualification, to know that the deal was good and winnable.
Yeah.
Obviously subject to price and whatnot, but weren't afraid to roll up their sleeves with people, and that gets the respect, I think. But then they also had the ability to say no to things. So the risk is, I'm sure many people listening know there's all sorts of opportunity in the market, and you have to be disciplined, and you have to know when to say no. And people don't get offended. And they don't even get offended if you say it in the right way. You know, if you say to them, look, I think you've just come to us because you need another quote. I wouldn't quite say it in those terms, but it's really not worth. It's really not good for us to do that. If it's a genuine conversation, then so be it. But and the average consultant doesn't really understand how to do that necessarily.
Yes. Yeah. Rob, what if you had your time over, what would you do differently?
I think we bootstrapped the business, so we never borrowed any money. We made a profit from day one and paid ourselves properly. And I think if I did it now, I would do it with a big bucket of money to start with, and I would go hard at the right thing. Now that's very easy to say down the track when I've learned all those lessons and I know what good looks like. But it takes a while, you know, scrabbling around. It's cool, you know, it's nice to know that you've funded the thing from the beginning and you don't have debt or shareholders, angry shareholders to deal with.
Yes.
But I remember in our first office, I think our kids came in and screwed the chairs together. We had plastic chairs. We had to make a decision about whether we could afford a daily newspaper. I'm joking, but you know what I mean. And I think, I think I would have been nervous then about taking in external money. But and just you have to be careful it's the right money. But and I'm contradicting myself slightly because these days it would be my money if I did it again. But it's just accelerates things significantly.
Yeah, I guess I don't know if this makes sense in your context, but I often think, you know, of the distinction between growing and scaling. And scaling is when you know that there is a market, that your proposition works, so you know what levers to pull. And I think at that stage,
absolutely,
it makes sense to take on money so you can turn those levers faster. Or
correct. And that was our logic for it. That was our logic for listing, was to get external money and then create a platform that we could raise more investment and then dilute ourselves as we went, and create a platform for the senior management team to participate in equity. And that would have made sense, or did make sense.
Why did you decide to list and not because presumably you could have sold at that point on a nice bit of cash and retired?
Oh, mainly because we saw the opportunity to list, take some money off the table, go again for 2 to 3 years, get the business above. There's a sort of in down here in Oz, there's a sort of magic number. It's north of 100 million value, enterprise value. If you're not past that, then the major international strategic acquirers aren't really that interested.
Yep.
And at that stage, we were less than that. We ended up far more than that, but we were less than that. So we wanted to sort of get that leg up, go for another 2 or 3 years. Also, listed businesses, there's obviously a lot more governance. There's a lot more structure, maturity most of the time. You know, you're subject to full audit and all those things. Independent board. And in fact, the listing process itself forced us to do a lot of that work to get through due diligence and compliance, set up a board, audits, independent advisors, and sign off and forecast, all that stuff. So when the trade bar came along, we had all that ready to go.
Yeah, okay.
So it's not a bad thing, even if you don't do it. I mean, it's different in the US and the UK. You have to bear in mind the Australian share market is quite small. So listing $100 million, $120 million business here is not unusual. That's quite small for UK, but you go to AIM or something. But for the right reasons. So it was to springboard the next 2 to 3 years, get us to a bigger scale, take some money off the table. One of the things, though, you do begin to realize as you go through the process, it's not that simple, because you do end up with a bunch of other shareholders, and you're still the main people. So if you start selling shares, that creates issues. Albeit that we would have still had 60% of the business, but it's a challenge. And I think, again, you talk about those scale things, you probably want to get north of 500 million as a listed business, particularly in the Australian market. A lot of that here is done purely by acquisition, sort of roll-up style.
Yeah.
And I was never really keen on that. So when the offer came along from Nomura NRI, it was a very good offer, better than we expected to achieve in terms of an IPO and the follow through from that. Significantly less risk, good business, saw the value in Velrada, so it was a good outcome.
And tell me about the difference for you as, the guy in charge between when it was just a private company that you were the major shareholder and suddenly becoming I presume you were a minority shareholder when you listed?
No, we would have collectively, the four of us would have been 60%.
Okay.
So we would have floated 40%.
So you still had control then? Okay.
Yeah. But you say that, but it's a small cap, micro cap kind of proposition. So you're courting institutional shareholders because you want to build a good share register.
Yep.
However, if they decide they don't like you, that can have a significant effect on the share price. So it's tricky. I think if you've got a thought about, as you say, taking a business that is, it's a question of pulling the levers. You've got the expansion plan and it works. You've got the formula, and you want capital, and then you want the credibility and the attractiveness to an acquirer of a listed business. I mean, there are downsides to an acquirer taking on a listed public business, obviously, but from a risk perspective, they quite like it. Particularly the Japanese. There's a very high level of governance and care and due diligence in Japanese acquisitions, it seems to me.
Yeah.
So they quite like that. But as I said, we'd already done most of that work. We hadn't actually taken the step of pressing the button and launching, but we had everything else lined up. And it would have been a different role for me. And potentially one that I probably may not have been quite so comfortable with. It is very much an external market-facing, shareholder-facing role.
Yeah.
And I think I probably would have stepped back within 2 or 3 years and brought in someone with that sort of capability to take it to the next level.
Yeah. Did you use Equitech for both transactions, for the float and the sale?
I'm afraid we didn't. That's nothing to do. It was more just to do with timing and how things worked out. And sure. I'm forever in their debt for all the advice that they gave me. In fact, I'm having lunch with the local Equitech managing partner, Australian management partner this week. And I benefited enormously from their advice. Yes. It just didn't work out. So for the IPO, we were using your standard brokers and accountants.
Yep.
And we had BDO, very good people from BDO helping with that. And it's more their bag, to be honest. It wasn't necessarily Equitech's bag.
Yeah, sure.
And the Equitech guys were kind of also very helpful in explaining to me the difference between a listed scenario and a trade sale.
Yep.
And they were right. It just happened to be that they weren't, they sort of weren't there at the point. And then when the offer came along, everything had been done, really.
Yes. Yeah. Of course. Yeah. Yeah. I guess with floating, BDO have got, they're primarily an accounting firm, and they've got that capability. You need that, don't you, for that type of deal? Yeah,
and you need unfortunately the lawyers. You need the independent investigating accountants. You need the independent directors and so forth. That's not to say that I'm sure Equitech's got some of that capability. It's just the way it sort of panned out. And I'd actually worked with BDO. There's a tremendous partner there in Melbourne, a chap called Tony Chevallet. And Tony had done some things with us on and off for about 10 years. He particularly helped me through COVID in terms of managing the business and how to deal with it. And the difference with an accounting firm is that they have a lot of that depth, in terms of doing the analysis, running the due diligence, the modeling, all of that stuff. And you can't underestimate how important that is.
Yeah.
The major acquirers, the strategic acquirers, will bring a due diligence team to a small deal like ours of 10, 20, 30 people.
Yeah.
Including advisors who are just, their advisors who are difficult to manage. So it's quite a thing. You need a capacity and capability to manage that.
Did you do vendor due diligence? Did you do your own due diligence?
Yes, we did. It was funny actually. Well, Accenture was one of the prospects for us, and I happened to have a couple of old London buddies who were working there in their M&A world, so good conversations with them. And the sponsor of that deal was a great a lady who we knew well. We turned away a couple of other offers, mainly on fit and culture. And some quite funny interactions with people. It's an entertaining process. It's a pleasure, in the sense that you've got a successful business and you get interest, and it's very flattering. but some of the scenarios that we ended up in were quite humorous. The incumbent telco down here is a bit like the old BT in some ways.
Okay.
Very old school in terms of approach, very infrastructure, telco kind of mentality. There's also in Australia, there's a lot of the roll-ups.
Yeah, sure.
Some private equity backed, some listed, and they can work or not. So I quite like the idea, though, of the thing with NRI was substance and real depth of credibility in their management team, leadership team.
Okay.
The ultimate sponsor, Hero, was a very talented and capable man, very good with us, great interpersonal fit. Obviously, very respectful, intelligent culture and behaviour. I'd not worked much with Japanese companies, but very honest, and once they committed to something, they would see it through and stick to their word.
But did the decision take a while? Often,
I
find the
no, because I think we were sort of at the time the equity markets down here were starting to sort of, particularly for IPOs, were starting to struggle a bit.
Yeah.
So we could have gone ahead. We would have taken less money probably at that stage. We ended up probably in a similar position through the trade sale. So no, the decision didn't take that long. I mean, my partners were probably more willing and keen than I was. But they were, at the end of the day, they were the ones doing all the work. So their view absolutely mattered. No, the timing was good, I think. And the decision, it was the right, we all felt it was the right decision. We had a couple of good non-execs. We talked them through the offer. A couple of good external advisors. My old business partner, Steve, and they're looking at me saying, well, this is better than you would get in a listed scenario. Why would you put yourself through the pain? And I kind of think, well, maybe I sort of think, well, what if we'd gone the listed route and stayed independent? But
well, it didn't end up too badly, did it?
No, totally, no. And I've taken a break, and I'll get back into doing some other things. And I miss the people more than anything. The four founders, one of who's still in the business. That's probably the main thing. But we do catch up with them quite regularly. And it's a big family now, after the years. There's a lot of Velrada babies. There's a lot of people who've moved around the world, grown their careers with the business, and a great culture, so, and that's been preserved, and that's
great.
One of the best aspects of the deal is that that culture's preserved, and the office environments are the same, branding's the same.
Yes, I noticed that. Yeah, it's rarely the case, isn't it? You usually get absorbed into the Borg.
Well, the local CEO, Dean, he had a lot of acquisition. He has a lot of acquisition experience, and it's quite pragmatic. And I think his view is, if it ain't broke, don't fix it.
Yeah. Yeah. Rob,
Whereas if you're in a Accenture sort of scenario, then yes, you are sucked into the borg very quickly.
It's buying your way to innovation, isn't it? That's the Accenture one. It's worked, it's worked quite well for them. Their share price has been pretty impressive over the last 10 years. But I also know they've lost a lot of good people who don't like working for the Borg.
Yeah, and you get pretty much absorbed on day one. There's no kind of,
No.
it's just that's it.
Yeah. Yes. Listen, Rob.
Great business though.
Thank you so much for your ties. A really nice, it's a good story, and you've provided us with some really honest and useful insights. So really appreciate
Glad
it.
you said that. Thank you. I'm always open to the odd consult if you have any. I'm not keen on getting back into any real work, but I'm always happy to share opinions.
Thank you.